Hello and welcome to another update video about Natgas. Natgas, slight upside yesterday, broke above that 269 level. We talked about that already in yesterday's video, that this move to the upside here is certainly gaining in probabilities due to the break above 269, which was the last swing high. However, we are obviously not really above that A wave high, which I have currently labeled as A wave, the $3 level, which was printed on the 6th of March. This will certainly be the next target for the bulls, and really only then this particular wave count will be confirmed, this wave count in which a C wave is rallying higher in an overall fourth wave. So this wave count currently suggests this is an A wave, this is a B wave, and the C wave is in the making. Now, I still have doubts about this scenario, but of course, as long as we are holding the $2.14 level, this is certainly a valid assumption now. Yesterday I highlighted to you that it would now take a break below 214, which is this wave 2 low, to invalidate this particular wave count, which now allows for further upside. First of all, to $3, the 6th of March high, but then it should really go higher. And we talked in previous videos about possible targets. So if I take the length of the A wave, go to the low of the B wave, the length of the C wave, a typical target would be the 1.618 extension at 365. This is certainly one valid target, but we need to get more clarity about the subdivisions in order to be able to calculate proper targets then here for the C wave. And first of all, I need confirmation anyway by having a break above the 6th of March high. This is a short-term bullish scenario which would still lead to another low later. Alternatively, of course, the wave 2 low was already in, and we're already now in an actual beginning of a bull market rally to $5-10 plus. Yeah, but I haven't seen enough evidence for that at this stage to confirm that. Also, you need to be aware that obviously further downside, direct downside, cannot be ruled out until price breaks above $3, and the $2.14 level, when that's broken, that would be our signal that things are turning down more directly. Now, I'm still not entirely convinced that this is the count to the upside. It's an extremely difficult market at the moment. It's a possible trend change situation here, but we certainly, with that 269 level, we broke above quite important resistance. We had resistance here before, we had resistance here, and then here again. So yeah, price broke above that level here as well. So quite a bit of an important range actually. What I find quite important is, and quite interesting, is that we can combine those swing lows down here to a trend line. And if you then add a parallel line, basically drawing an ascending price channel, you can see that price is currently pushing against the ceiling there. And we are possibly at a breakout point at the moment. So this is an interesting level to watch. Now, okay, we can argue a little bit how accurately is this trend line drawn, but more or less, I think it is of relevance. I think it has now quite good chances to break higher now that it broke above the 269 level. And a break above that trend line here would give further consideration to the yellow wave count, which would be a third wave rally within a larger third wave. It's just not typical third wave impulsive behavior at the moment. And ideally, in this particular third wave, I would like to see price go to the 1.618 extension of wave 1. We talk here about $3.20. But yeah, there's a lot going on there at the moment. Market is really, really slow. Has been in this broader range for many, many months now, and it's time to get some movement. It's a really boring market. It has been a really boring market, but certainly against $2.14, there is now short-term upside potential into that, you know, 350, 360 region first, and then we need to take it from there, depending on how the structure looks like. We'll be able to get some additional clues. Now, just be aware that, again, downside is not ruled out, and it can still change. We're in a situation in which different wave counts are possible, just purely due to the fact that we haven't got a confirmed trend reversal yet. And trend reversals are, as you will know, the most difficult aspects of a chart to analyze and to trade, because a trend, which is a downtrend, might be getting towards the end. Okay, and we are trying to change the trend back to the upside. So the bulls and the bears are fighting. Market hasn't fully made up its mind yet. And first of all, we need to see a clearer structure emerge, which is not corrective, but at the moment this also looks still very corrective. A lot of overlapping price action. So to be honest, this is also a wave count that I expect to change, to morph at the moment. So we need to keep options open a little bit. It's sometimes just a bit of a wait and see until we have a clear setup here on the chart. A lot of time is just waiting here because it's just been ranging for a few months. So relevant levels, just to repeat, the $3 breakout to the upside. That is important. $3.19 is the target for the third wave. And to confirm a more bearish wave count, that would require a break below $2.14, because below $2.14, this yellow wave count, which is part of the larger third wave, will be completely invalidated. Yeah, so you don't want price to go below that level if you're following here the bullish wave count, because that's sort of the make or break point. Yeah, it's basically a make or break line here where definitely short-term bearish potential will be realized, and the bearish wave count, the short-term bearish wave count even, is obviously still possible, as a way, instead of this wave 4 being here, the wave 4 would be here on the 6th of March high, and then a wave 1 to the downside. This could still be a wave 2, 3, 4, 5 would be the bearish wave count. And in this scenario, by the way, if we look at Fibonacci resistance here at the moment, yeah, let me just add that to the chart. We are now at the 78.6 retracement level. Together with that trend line, the 280 level is certainly an important resistance level, but a break above 280 will already put more emphasis on the more bullish wave count, because in the bearish wave count, this would be a wave 2 pullback to the upside, and that would normally not break above the 78.6 retracement. Okay, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.